Welcome to the class Income Tax Law and Practice. In this class, we are going to discuss about exempted incomes under Section 10 of Income Tax Act. Myself, Dr.A.Devi from KZS Kazinada College of Arts and Science. Exempted income. Exempted incomes are those incomes on which income tax is not charged. The exemption may be based on the nature of the income, or it may be based on the status of the assessee, or it may be based on the source from which the income is derived. Under Section 10 of the Income Tax Act 1961, following are the incomes that are exempted. As the list is very long, it is just listed out. These incomes are not to be included in the total income of an assessee, so no tax is payable on such income. The listed exempted incomes are for person defined in Income Tax Act. Certain incomes are fully exempted, example agricultural income, whereas certain incomes which are limited with some provision and hence partly exempted. When it becomes their profession, one must know all these exempted incomes. Some of these incomes will be discussed while we computing an income of an individual. There are specific kinds of income that are exempt from tax as long as these type of income fulfill the guidelines and provision outlined in the Act. Income that is deemed to be non-taxable is referred to as exempt income. However, such income is required to be declared by the taxpayer while filing his or her income tax return. Dear UG students, from your exam point of view, selective 10 exempted incomes are listed out. Number 1, agricultural income, Section 10 of Subsection 1. Agriculture income defined in Section 2 of Subsection 1 is totally exempt from tax. Number 2, remuneration of a foreign trainee, Section 10 of Subsection 6. Any remuneration received by an employee of foreign government during his stay in India is not taxable, which means an employee is working in India, staying in India, whereas he is working for foreign government and he is receiving a remuneration, and whatever be the remuneration he is receiving are exempt under Section 10 of Subsection 6. Allowances or perquisites received by government employees working outside India, Section 10 of Subsection 7. Any allowances or perquisites paid or allowed by the government to its citizen employed outside India are fully exempt from tax, which means the employee is working for Indian government, but his employment is outside India. If he is receiving allowances and perks, and whatever be the allowances and perquisites he is receiving is being exempted under Section 10 of Subsection 7. Fourth one, sum received under life insurance policy, Section 10 of Subsection 10D. Any amount received under a life insurance policy scheme, which means the settlement of his principal policy amount, including the sum allocated by way of bonus on such policy, not only the amount he paid in the form of premium, but also the bonus sanctioned for him for the policy taken shall not be included in the total income of a person. It is need not to be added into his income. Allowance to MP, Section 10 of Subsection 17. Number 1, daily allowance is exempted to both MP and MLA. Number 2, other allowances are exempted for MP, which means other than daily allowances, whatever the other allowances is being given to MP is being exempted. Number 3, constituency allowances received by MLA are exempted. Number 6, awards and rewards under Section 10 of Subsection 17A. Any awards and rewards whether received in cash or kind or exempt from tax. So like a sportsman or the Nobel Prizes or the awards and rewards receiving in India, either in cash or in kind are fully exempt from tax. But these awards must be instituted by proper authority. Otherwise, the exemption cannot be claimed. 7. Family pension received by family members of armed forces, section 10 of subsection 19. So the family members of armed forces are, if they are getting a family pension received by their widow or nominated heirs of members, other armed force is not chargeable to tax. 8. Income of Provident Fund, etc. Section 10 of subsection 25. The incomes of statutory Provident Fund, gratuity fund, superannuation, etc. are fully exempt from income tax. 9. Income of minor, section 10 of subsection 32. Where the parent's income is clubbed with the income of minor child, the parent is eligible for exemption of up to rupees 1500. It is eligible if a minor child is having an income, and if it has been clubbed with the income of a parent, then the parent can claim an exemption of rupees 1500, up to 1500, which means the income is below than this 1500, he cannot claim the entire amount. So up to 1500 is eligible as per section 10 of 32. Last one, 10th one, long-term capital gain on transfer of equity shares or in units in case of covered by securities transaction tax subject to STT. Long-term capital gain on transfer of equity shares subject to STT as per section 10 of 38 is exempted in computation of total income. Thank you for listening the same. Doubts, if any, may be clarified through my given mail ID.